What do you make of this depreciation story? Because this kind of ripples back into all of this. The fact, how quickly do you depreciate a chip? I've heard anything from 2 to 6 years.
So this is what Michael Barry has been talking about, and this is what Cameron Price has been talking about in his opinion column today, which is well worth reading, because he's kind of done a historical analysis going back to the beginning of this century on depreciation and the spend on capex and how that has adjusted with the hyperscaler spend. Look, the depreciation is real, and so there's a real question mark: are they marking this correctly, the hyperscalers, in terms of how quickly these AI assets, particularly the AI accelerators themselves, the chips themselves, actually depreciate in value. So you can sink $100 billion into AI accelerators 1 year. They're not going to be worth that amount 12 months later, and then you push out 3 years down the line. So for the accountants out there, that is a question worth scoring over. Are they marking it correctly? Is a question that Cameron Price in his piece today is putting on the depreciating AI assets, and whether or not that's going to become more of a concern going forward.
Tom, thank you. Tom McKenzie with the Tech Beat this morning. Let's widen the conversation, talk about the markets in 3 minutes. Joining us, our Bloomberg Executive Editor for Asia Markets, Paul Dobson, who has a head start on us here in Europe. Paul, very nice to see you. Thank you for joining us. So let's talk about Treasury markets. We've got Treasuries responding, it would seem, to the weakness in the US labour market data and further expectations of rate cuts from the Fed. Anything unusual in the moves this morning?
Oh, well, absolutely, Anna. It's unusual that they move so much in our time zone, but the reason is that the cash bond market at least was closed yesterday. So this is the first time that the Treasury market is able to respond to those ADP figures, showing that continuing trend of a weakening labour market and giving the market, therefore, a little bit more confidence that the Federal Reserve will go ahead with another rate cut in December. It's still very split among the Fed's speakers, right? We hear from some of them talking about the concerns about sticky inflation. We hear some of them talking about concerns about the labour market, and what we really need to know is which way is that middle ground, the middle patch, which probably includes Jerome Powell himself. Which way is it going to turn? And so I think it's going to be really interesting if we do get the US reopening, then we'll start to get some of the official data trickling through as well. We'll get probably September labour data as one of the earliest indicators, and that's going to give us some fresh signals, but it's also probably likely to give us more volatility. At the moment, though, lower yields, a little bit more hope that the Fed will cut again.
Paul, am I watching my yen screens for intervention? Is that next?
Yeah, I don't think that we're that close yet, but there definitely is that sense the government is getting a little bit more worried about the yen. And no surprise, it's at a weakest level since February today, continuing to dribble, approaching 155. Now, the Japanese officials tend to have a couple of rules of thumb that they use to judge when they would actually need to take physical intervention, i.e. stepping into the market and buying the yen to sort of stabilise things. Either a 10 yen move over the course of about a month. We're not really at those levels, not until we get towards the 160, depending on how much you squint at the chart, or a 4% move over the course of a couple of weeks. And again, you know, we'd need to get up into the 158 levels, something around there, before they come in. Nonetheless, the rhetoric that we're getting, the pushback that we're hearing from the administration, from Katayama, the finance minister, is getting louder, and the yen is still under pressure as well. So one to watch there.
Let's circle back to a conversation we actually just had with our colleague Tom McKenzie. But Paul, there's a lot of concern about what the SoftBank's selling of Nvidia stake actually means. What's the take in the region?
Yeah, I am going to be completely honest with you, Kriti, and don't really know. And that's why I think it's so fascinating. And I heard your debate with Tom about it all, and I think that you covered a lot of the salient points. But the fact of the matter is, in the ADR market, so in the US trading yesterday, SoftBank was up. Today, it really bombed at the open, and it has been starting to come back again. But there's all of this uncertainty about how exactly do you value these AI companies at the moment, including OpenAI, which it holds and wants to invest more in. At least it's sort of like, you know, managed to cash in on Nvidia, but then people are saying, well, is that some sort of sign that it worried that it's at the top, or what's it going to do next with its resources? So all of those AI valuation issues still playing out in the background, even as the market continues to rally.